Hello, and welcome to another enlightening episode of AltFinance, Funding Frontier. I'm your host, Jason Feimster, the founder and CEO of Moonshine Capital. Today, we're embarking on a journey to unravel the mysteries of term loans and how they can be a catalyst for long-term growth for entrepreneurs. In our previous episodes, we've explored various facets of alternative financing, from the agility of revenue-based financing to the quick access provided by microloans. But today, we're diving deep into the financial tool that's been pivotal in shaping the success stories of countless businesses: term loans. Term loans, often perceived as a traditional financing route, are in fact a cornerstone in the entrepreneurial world. They are the bridges that connect ambitious visions to tangible realities, enabling businesses to leap from concept to growth. But what makes a term loan different? How can it be the key to unlocking long term success for your business? In this episode, titled Term Loans Demystified: Long Term Growth for Entrepreneurs, we'll peel back the layers of this financing method. We'll explore what term loans are, how they've evolved over the years, and most importantly, how you, as an entrepreneur, can leverage them to fuel your business dreams. So, whether you're sitting at your desk, driving to your next big meeting, or just taking a break from the hustle of business life, stay tuned. This episode is packed with insights, expert opinions, real life success stories, and practical advice that can reshape your financial strategy and propel your business into the next big phase. Let's dive in and demystify the world of term loans together. Understanding term loans. Let's start at the very beginning. A very good place to start when you want to understand term loans. What exactly are term loans? In simple terms, a term loan is a loan from a bank for a specific amount that has a specified repayment schedule and a fixed or floating interest rate. But there's more to it than just this definition. Term loans come in various forms, but they're primarily categorized into two types: short term and long term loans. Short term loans are typically due within a year or less, ideal for immediate, smaller financial needs. Long term loans, which are our focus today, are due over a period longer than a year and are often used for significant business investments. This distinction is crucial because it affects how a business plans its finances and investments. A long term loan is not just a source of funds, it's a commitment that shapes a company's financial landscape for years to come. It's like setting the foundations for a skyscraper. You need to be sure that it's robust, reliable, and aligns with your long term vision. But where did the concept of term loans originate? The history of term loans is as old as the history of banking itself. Banks and financial institutions have been offering loans to businesses for centuries, evolving with the changing economic landscapes. In the early days, these loans were primarily reserved for large, established companies. However, with the rise of entrepreneurship and small businesses, term loans have become more accessible and tailored to meet diverse business needs. The evolution of term loans has been significantly influenced by economic trends, technological advancements, and regulatory changes. In recent years, we've seen a shift towards more flexible and customized loan products, with lenders considering a broader range of factors beyond just credit scores and collaterals. This evolution reflects a deeper understanding of the varied and dynamic needs of modern businesses. Understanding term loans is the first step in recognizing their potential as a tool for growth. How exactly do they fuel entrepreneurial success? Stay tuned as we delve deeper into the critical role term loans play in the world of entrepreneurship. The role of term loans in entrepreneurship. Now that we have a grasp on what term loans are and their evolution over time, let's dive into the heart of today's topic: the pivotal role of term loans in entrepreneurship. Entrepreneurs are the trailblazers of the business world, often embarking on ventures that require significant financial resources. This is where term loans come in as a crucial lifeline. Think of term loans as the fuel for a rocket. Just as a rocket needs fuel to reach space, businesses need financial backing to realize their potential. Long term loans provide this essential support, offering a substantial sum of money They can be used to cover a range of business needs, from expanding operations and purchasing equipment to investing in research and development. But why are term loans particularly advantageous for entrepreneurs? One of the main reasons is predictability. With fixed repayment schedules and, often, fixed interest rate, term loans provide a level of predictability that is invaluable for business planning and budgeting. This predictability allows entrepreneurs to forecast their financial commitments accurately and plan their growth strategies accordingly. Let's look at some real life examples to illustrate this point. Take the case of a tech startup at XYZ Innovations. In 2018, they secured a long term loan to invest in developing their flagship product, a groundbreaking AI driven analytics tool. The loan not only provided the necessary capital for development, but also allowed them to forecast their cash flow accurately, ensuring they could sustain their operations while the product was in development. Today, XYZ Innovations is a market leader, with their product being used by major corporations worldwide. Another significant advantage of term loans for entrepreneurs is the potential for building credit. For many small businesses and startups, establishing a solid credit history is a challenge. By successfully securing and repaying a term loan, these businesses can build their credit worthiness, opening doors to more favorable financing options in the future. The impact of term loans on entrepreneurship cannot be overstated. They are not just loans, they are investments in the future of a business. By providing the necessary capital at critical junctures, term loans have the power to transform a bold idea into a thriving enterprise. In the next segment, we'll explore the eligibility criteria, the application process for term loans, and how to navigate these to your advantage. Stay with us as we continue to demystify term loans and their role in driving entrepreneurial success. Navigating term loans. We've already explored what term loans are and their indispensable role in entrepreneurship. Now, let's navigate the practical aspects of term loans, understanding the eligibility criteria, the application process, and how to align them with your business needs. First up, eligibility. Securing a term loan isn't a one size fits all scenario. Lenders typically look at several key factors: credit score, business history, cash flow, and sometimes collateral. Let's break these down. Your credit score is like your financial fingerprint. It gives lenders a quick snapshot of your credit worthiness. A higher score can not only increase your chances of approval, but also fetch you better interest rates. But what if you're a startup or small business with limited credit history? Don't lose heart. Lenders are increasingly considering other factors like your business plan's viability and market potential. Business history is another critical element. Lenders want to see that you have a track record of managing finances responsibly. This does not mean new businesses are automatically disqualified. If you're new, your business plan's robustness and market research play a more significant role. Now let's talk about cash flow, the lifeblood of your business. Lenders want to ensure that your business generates enough cash to cover loan repayments. This is where detailed financial projections and a solid business plan can help make your case. In some cases, lenders might require collateral, such as property, equipment, or inventory, to secure the loan. This acts as a safety net for lenders, but also means you need to carefully assess the risk involved. Once you understand the eligibility criteria, the next step is the application process. This can vary from lender to lender, but generally involves submitting a detailed application, your business plan, financial statements, and possibly a personal statement. Here's a pro tip: be transparent and thorough in your application. Provide clear, detailed information about your business, how you plan to use the loan, and how you intend to repay it. Remember, lenders aren't just investing in your business, they're investing in your vision and your ability to execute on that vision. Understanding interest rates and repayment terms is crucial. Interest rates can be fixed or variable, and choosing between them depends on your risk tolerance and the market conditions. Repayment terms can range from a few years to a decade or more, affecting both your monthly payments and the total cost of the loan. In the next segment, we'll delve into the risk associated with term loans and strategies to mitigate them. Navigating term loans can be complex, but with the right information and approach, it can be a powerful tool in your entrepreneurial arsenal. Risk and mitigation. Understanding the risk associated with term loans and learning how to mitigate them is crucial for any entrepreneur looking to leverage this financial tool effectively. Let's dive into the potential risks and strategies to navigate them safely. One of the primary risks in taking a term loan is the obligation of repayment, regardless of your business performance. This means if your business faces a downturn, you're still on the hook for that loan repayment. This risk underscores the importance of careful financial planning and having a buffer in your cash flow projections. Another risk is the possibility of high interest rates, especially if you've opted for a variable rate loan. While variable rates can offer lower initial rates, they can increase over time, impacting your repayment amount. It's essential to weigh the pros and cons of fixed versus variable rates based on your business's financial stability and market conditions. Now, let's talk about the risk of over leveraging. Borrowing more than what your business can comfortably repay can lead to financial strain and, in severe cases, insolvency. It's tempting to take a larger loan for ambitious expansion plans, but it's crucial to balance ambition with practical financial limits. So, how do you mitigate these risks? Here are some strategies. First, develop a robust business plan with conservative financial projections. This plan should include a detailed analysis of your revenue streams, expenses, and realistic growth expectations. Having a buffer in your projections can help you manage unexpected downturns. Second, consider the term and structure of your loan carefully. Opt for a loan term that aligns with your business's cash flow and growth plans. Sometimes a shorter term loan with higher payments might be more manageable than a longer term loan that accrues more interest. Third, regularly review your business's financial health. This means keeping a close eye on your cash flow, expenses, and revenue trends. By staying informed and agile, you can make timely adjustments to your financial strategy. Finally, don't hesitate to seek advice. Financial advisors, experienced entrepreneurs, and either other business owners can provide valuable insights and guidance. Remember, every business journey is unique, and learning from others can help you navigate your path more effectively. In our next segment, we'll bring in a financial expert to share their insights on term loans and answer some common questions. Stay tuned as we continue to demystify term loans and their role in empowering your entrepreneurial journey. Expert insights. In this segment of AltFinance Funding Frontier, we delve into expert insights on term loans. I've gathered invaluable knowledge from seasoned financial experts to guide you through the nuances of term loans. Firstly, let's talk about the decision making process. Experts emphasize the importance of understanding the purpose of the loan. It's crucial to have a clear idea of why you need the loan and how it aligns with your business objectives. This could range from expanding your operations to acquiring essential equipment. Remember, the purpose should justify taking on the debt. Another critical aspect highlighted by financial advisors is assessing your ability to repay the loan. It's not just about securing the loan, it's about managing it effectively. You should have realistic cash flow projections and a solid repayment plan. Financial expert Alex Martin notes your loan should align with your business's financial health and future revenue streams. Overestimating your ability to repay can lead to financial strain. Interest rates are another key area to consider. Martin advises compare interest rates from various lenders to ensure you get the most favorable terms. Also, decide between fixed and variable rates based on your risk tolerance and market analysis. Collateral requirements are a crucial consideration. Some term loans may require collateral, which could include business assets, personal assets, or both. Understanding the implications and risks associated with collateralized loans is essential. As Martin puts it, you should be comfortable with the assets you're putting on the line. Assess the risk and ensure that they are manageable within your business model. Lastly, experts advise on the importance of understanding the terms and conditions of the loan agreement. This includes not just the interest rates and repayment schedule, but also any covenants or restrictions imposed by the lender. Martin suggests carefully review the loan agreement with a legal or financial advisor to ensure you understand all the terms and are aware of any potential implications for your business. In summary, when considering a term loan, it's vital to evaluate the purpose of the loan, your repayment capacity, the interest rate, collateral requirements, and the loan's terms and conditions. Each of these factors plays a significant role in ensuring that the loan serves as a tool for growth and not a financial burden. In our next segment, we will showcase some of the success stories of businesses that have effectively used term loans to fuel their growth. Stay tuned as we bring these inspiring stories to light. Case studies and success stories. Having discussed the ins and outs of term loans, it's time to bring some inspiration to the table. In this segment, we'll look at real world case studies and success stories of businesses that have harnessed the power of term loans to achieve remarkable growth. Let's start with the story of Green Tech Innovations, a renewable energy startup. In 2017, Green Tech was a small team with big ideas, aiming to revolutionize the way we use solar energy. However, like many startups, they faced a significant hurdle: funding for research and development. They secured a long term loan, which provided the necessary capital to invest in their cutting edge solar panel technology. Fast forward to today, and GreenTech has not only developed a patented solar panel that's more efficient than existing models, but they've also expanded their operations to 3 continents. Their story is a testament of how strategic financial planning and the right funding can turn a vision into a global reality. Another success story comes from the hospitality sector. Urban Eats, a culinary venture started by a group of passionate food enthusiasts, sought to redefine the dining experience in urban spaces. In 2019, they obtained a term loan to open their flagship restaurant in a prime city location. With a focus on sustainable and locally sourced ingredients, Urban Eats quickly became a culinary sensation, leading to the opening of 4 more restaurants in major cities across the country. Their journey highlights how term loans can be instrumental in scaling a business at the right time and place. These stories are not just about financial success, they're about the entrepreneurial spirit and the courage to dream big. Green tech innovations and urban needs show us with the right financial tools, a clear vision, and an unwavering dedication, the possibilities for growth and success are boundless. As we wrap up this segment, remember that these success stories started with a clear vision and a well thought out plan to use term loans effectively. Whether you're in tech, hospitality, or any other industry, your business too can benefit from the strategic use of term loans. In the next segment, we'll summarize our journey through term loans and wrap up with some final thoughts. Stay tuned as we conclude this enlightening episode on Term Loans Demystified: Long Term Growth for Entrepreneurs. Recap and final thoughts. As we draw close to an end of today's episode of AltFinance, the Funding Frontier, let's take a moment to reflect on what we've explored in Term Loans Demystified: Long Term Growth for Entrepreneurs. We started by understanding what term loans are, a type of loan that's essential for businesses looking to grow and expand. We saw how these loans have evolved over time, becoming more accessible and tailored to the diverse needs of modern businesses. We then delved into the role of term loans in entrepreneurship. Term loans are more than just financial instruments, they're catalysts for growth and innovation, offering predictability and the opportunity to build a solid credit history for businesses. Navigating term loans was our next focus. We discussed the importance of understanding eligibility criteria, the application process, and making informed decisions about interest rates and repayment terms. These aspects are crucial in ensuring that a term loan serves as a growth tool and not a financial burden. Understanding the risk associated with term loans and strategies to mitigate them was another vital area we've covered. From the importance of careful financial planning to the need for regular reviews of your business's financial health, we highlighted how being proactive and informed can help navigate these risks effectively. We also heard expert insights summarizing key considerations such as the purpose of the loan, repayment capacity, and the importance of understanding the loan's terms and conditions. These insights are invaluable in making informed decisions about term loans. And finally, we were inspired by real life success stories. Businesses like Green Tech Innovations and Urban Eats showed us how strategic use of term loans can lead to remarkable growth and success. As we conclude, remember that term loans can be a powerful tool for your business, but like any tool, they need to be used wisely and strategically. I hope today's episode has shed a light on term loans and inspired you to consider how they might fit into your business's financial strategy. Thank you for joining me on this episode of AltFinance, the Funding Frontier. I'm Jason Feimster, and it's been an absolute pleasure guiding you through the world of term loans. Stay tuned for our next episode where we'll explore another fascinating aspect of alternative financing. Until then, keep pushing the boundaries of what's possible in your entrepreneurial journey.